life insurance is a kind of insurance policy that provides a certain amount of coverage to specified people at the death of the client or insurer. Instead of being named life insurance, many people have argued that as it deals with death, it should have been named as death insurance. However, many do not like the negative way that the name sounds, and thus we got the name of this insurance service. In this insurance policy, the economic loss that might occur due to the death of the client is insured. The economic losses can be of different types. For example, a family can get into financial problems if that person had been the one and only returning members of that family. The loss that a family will incur that used to have stay-at-home mother, the expenses related to the death of a child, the final treatment expenses of someone who was getting treatment for illness, economic loss if a really valuable of the employee faces death, the insurance through which a person pay the estate taxes after his or her death, insurances that provide coverage if an individual dies from sudden accidents and so forth. You will be surprised to hear that the insurances for life have been around for hundreds of years, unlike some of the new insurance policies like the auto insurance policy. Even though there are some common characteristics between auto insurance policy and the insurance policy for life, they are different in most of the aspects. In life insurance policy, the insurance providers use a mortality chart that they have been able to develop through years of studying, and this is not done for auto insurances. Though it is really surprising, the mortality tables that are used are really accurate, and it helps the insurance service provider companies to be able to predict the amount of individuals that might die in a given year. By analyzing the table, the expense for insurance policy is derived, and this is why the insurance companies charge different amount of cost for policies in different years. Thanks to the advancement of technology, men now have been able to increase their life expectancy. This has decreased the amount of insurance premiums, and therefore the cost of insurance is also decreased. The most common and fundamental type of insurance policy for life is the annually renewable term policy. As the person ages, the premium amount gets higher as the possibility of the person's death is expected to increase each year. There are also other types of insurance for life that are available. If you go to an insurance company, you will be able to think about these policies and can choose from there your preferred one. However, before you chose a policy, you should ask the agents about all the rules and regulations regarding that policy. And it is always better to do some research before getting insurance, as you will be able to learn about the various kinds of services provided by the various companies.